Well, US Treasury bonds and Treasury bills are fixed income securities that are issued by the US Department of Treasury, and they really form part of securities issued by the US government. Now, they're a large market. The total size of the market is around $22 trillion. Treasury bills alone, which have a maturity of less than 1 year or less, are $2.5 trillion in size. Now, they're issued by the US government, so many investors consider them to be virtually risk-free. If we look at institutional investors, they use the yield on Treasury bonds as a proxy for the risk-free rate. They're used by a wide range of investors around the world. They're used by institutional investors, retail investors, and also by a large number of governments. What we've seen over the last year is we've seen the yield on Treasury bills jump quite significantly, and this has been really in line with the rapid rate rises of the US Federal Reserve. So what we've seen happen over the year, we've seen now short-term rates offered on Treasury bills are actually higher than long-term rates. So a lot of investors who lost money in 2022 in fixed-rate bonds as interest rates rose, they've switched into Treasury bills. If we look at our own ETF, T-bill, it's currently yielding around 5.2%, so quite a high yield, a lot higher than you might be able to earn in other places. And with inflation continuing to persist, we expect to see rates remaining at this level or possibly even increasing in time. So there are a number of opportunities. Firstly, they're yielding more than Australian cash and Australian short-term bonds. They can also be used as a risk management tool. When there are market episodes, markets become volatile, investors gravitate to safety. And that safety is often Treasury bills that they'll be gravitating towards because of their liquidity and because they're backed by the US government. If you have a particular view on the Australian dollar versus the US dollar, that is another use for them. If we look at the Australian dollar, it's known as a risk-on currency. So when markets fall, the Australian dollar tends to fall as well. So it can be used for that defensive purpose. Berkshire Hathaway has over 100 billion assets invested in Treasury bills. And according to Warren Buffett, he chooses Treasury bills over other short-term investments because of their security. So there really are two key risks. First of all, investing in Treasury bills, they're US dollar denominated. So as an Australian investor, it's not hedged back to the Australian dollar. So if the Australian dollar goes up against the US dollar, that's going to be negative for you. The other risk is that with any bond, there's a default risk. So there's the risk that the US government defaults, although most investors see that as being extremely unlikely. So individual Australian investors, if they believe my view, certainly that the AUD against the USD is going to go sideways or the Australian dollar is going to depreciate it, they could use it as an alternative, possibly to Australian cash or short-term investments, because they'd be getting a pickup of around about 1%. The other way to use it is to use it as a defensive asset. So if investors expect market volatility, in those market volatile times, what usually happens is the Australian dollar falls, and that would mean you're getting an increase in terms of the value of your T-bills, so giving you a positive return.